AMD just reported the biggest quarter in company history, $10.3 billion in revenue, which crushed analyst targets by almost $1 billion. And then the stock immediately dropped 5% after hours. Why would Wall Street punish a company for delivering record numbers? Because buried in the fine print is a China-sized problem that tells you everything about how fragile the AI chip trade really is. So let me show you exactly what AMD reported in their earnings, and then we'll break it down. And keep in mind, these surface numbers are misleading. Q4 revenue, $10.3 billion, which beat $9.6 billion estimate by $700 million. EPS, 1.53 non-GAAP, beat 1.32 estimates by 16%. Data center, unlike the problems that Microsoft is having, record, $5.4 billion, which is up 39% year over year. So that brings full year revenue for last fiscal year to $34.6 billion, which is up 34% year over year. That's mega. They are on a generational run right now. But like I mentioned, if you dig into that press release buried in paragraph 8, there's a little fine print that's not being reported on very widely. $390 million just of this quarter came from selling restricted AI chips to China, and this is probably not going to be repeatable for them. Here's a couple of numbers on the shell game that they've played here. So Q4 included, like I mentioned, those $390 million in sales of restricted AI chips. That's the MI308 chips sold to China. They also released some inventory they had in reserve, not just some, $360 million worth, which is a classic accounting trick. And AMD themselves say, this is them admitting this, that if you strip out the inventory reversal, if you strip out the China sales, gross margin was about 55%, not 57%. And the guidance for Q1 2023 is that they're only going to make about $100 million off of those China sales in this current quarter in Q1, which means that's going to be down 74% from this earnings from last quarter. This is classic earnings season manipulation. Hit the number with a couple of one-time items, get that number nice and big, take your profits before earnings happens, and then all of the normies that didn't have this information, like you and I, are left holding the bag and trying to cash out, which is why the stock is cratering. And keep in mind, Wall Street does not trade the past, it trades the future. And straight from the horse's mouth, AMD told them, future's not looking so good for us. Q1 2026, their guidance is $9.8 billion, give or take $300 million. That's a 5% sequential decline from Q4. Gross margin down to 55%, which is down 2 points from Q4. And this is after Wall Street already expected continued acceleration. Their stock has been on a decline for quite some time. And this exposes AMD's fundamental problem, why they are having such trouble in the market is they cannot compete with NVIDIA. NVIDIA has taken the lion's share and AMD is left hunting for scraps. How do they stack up? AMD's full year data center revenue, $16.6 billion. If you just take 1 quarter of NVIDIA's data center revenue, that's $14.5 billion. That's their Q4 figure alone. And they announced an open AI deal, but they're not going to start profiting that from mid-2026. And honestly, with everything going on in OpenAI, I would be surprised if OpenAI is still a reputable company by the middle of this year. If Microsoft last week, with their huge decline in sales, second biggest single day decline in company value in history. If that's the environment we are operating in, Wall Street is signaling that we want our AI profits now. We've had our money tied up in this Ponzi scheme for a while now. We're not seeing obvious return on investment. Give us our money back. We want a refund and we want to invest that money in something that's going to get us more money. So what does this actually mean for you if you're keeping an eye on the AI chip trade? I want to be clear here. AMD is not in trouble. They are still a growing company by every other metric. But the stock does seem overvalued at this point. It's priced in right now at 76x free cash flow. And when they beat earnings like they did today, and it's because of a lot of one-time things like one-off sale to China that they're not really going to be able to repeat at the same volume due to legislation surrounding that and release of existing inventory. When it's made up of a couple of one-time hits like that and it's not replicable, that's saying to me they're trying to keep an inflated valuation and prevent it from falling too much. Again, not in trouble, but stock likely very overvalued. You may wonder, is this a broader trend? Is this because of the AI bubble popping, which has already begun? Yes and no. It's hard to tell. We don't have enough data points yet, but we will on February 25th when NVIDIA has their earnings. If they're reporting beating their earnings, which, I mean, come on, that seems like a pretty safe bet. If they beat their earnings, when they beat their earnings on February 25th, if their stock declines, that is going to signal that there are even larger systemic problems going on. Again, both of those companies are going to survive, but they're going to take a haircut. And the AI infrastructure spending question that I keep asking on this channel, I've been asking since I started doing bubble videos last fall. What is the business model for AI models? How are people making money off of them? We don't know yet. Nobody has an answer for that. And Wall Street is starting to get really curious about it. Big tech spent $200 billion on AI infrastructure last year. They're not seeing a clear return on that, and they're starting to get antsy. AMD's results tonight are a symptom of that. Record revenue, record earnings, stock crashed anyways. That is the AI chip game in February 2026, my friends. If you found this useful, subscribe. We'll be covering the NVIDIA earnings in 3 weeks, and we're making multiple of these videos a week covering different AI-related stocks. I'm Dr. J. I am your technical due diligence man on these matters. Thank you for watching.